Yo, it's been a while. It's been a crazy week, but I'm here to do a weekend update of what's happened in the market this week. Missed out on a ton of gains, and I've learned a lot of lessons. I'm up 6.26% on the week, but the week could have been a lot better than what it was. Because I think at some point I was up almost 16,000, about 16,300. And this move here, 940, I was trying to let my winners run, but I didn't. The execution was off. And this is what happens when you don't have a trading plan, because when you get into certain situations, you just kind of free balling it. And then that's when mistakes come into play, because then you're thinking reactively instead of thinking proactively. And it's a recipe for disaster. Because I had a SPY put Tuesday at 9:30. I got into this trade right about here. So I'm thinking, okay, here, I'm just going to let it do what it do. I'm not going to interfere. But here was the expected move, the bottom of the expected move for the week. And as I did with QQQ, because I was in a QQQ 0DTE put, I exited out once it got close to the weekly expected move. Now, I didn't do that for SPY, and it just started rallying, it was to be expected, because it was very early on into the week. It was at the bottom of the expected move, and I went from plus 2,000 to, at the end of the day, I believe I was negative, probably about 100. So that's a large swing. Especially when I could have taken profits off the table. I could have set a stop loss. I didn't do any of those things. And that's why a trading plan is important, because it gives you a framework for when you get into certain situations, you know how to respond and how to handle it the right way. So that was Tuesday. Wednesday came. I got into another 0DTE trade, and the very next candle, it shot up and hit my stop loss. Now, I've had thousands and thousands of hours, not only back testing, before testing this specific strategy using these specific indicators. And I have a 2-choice exit plan. And generally, about 70 to 80% of the time, it doesn't hit my maxed stop loss. However, this was one of the few rarities where it actually did. And that was minus 1,500 that I suffered to this trade. And of course, as I'm looking after I exited out around here, I saw the price go exactly where I believed it was going to go. And it's tough. It's definitely tough. And I'm new to day trading intraday. I'm used to trading on the daily. You look at the different symbols towards the end of the trading session on the day, see if there's anything trending, or if you need to adjust positions for stop loss. If not, you don't do anything. If there is something, you execute, and you just come back the next day. When it comes to intraday trading, it's a whole different ball game, because you have to continuously do that. Depending on what time frame you're on, you have to continuously do that. And not only while you're doing that, you have to see things like moves like this that go against you. So when you get into a situation like here, when I got into this trade and it started going against me, it almost hit my stop loss. Almost. And that's trading is just one of those things where you may predict things are a rarity, like it happens 5% of the time, 2% of the time, 15% of the time, but you just always have to be prepared that for those 5% of times where it hits your max loss, that can happen 3 times in a row. It's totally possible. Now, I stayed calm, cool, and collected because I told myself I'm just going to trust my indicators, trust my strategy. I'm going to get out of my way. So the very next bar, because every 15 minutes when the new bar comes, that's when there is a larger move that happens, either up or down, depending on where the stop loss is and which way you're going. I just kind of knew that once it retraced, it was either going to have a larger move down and finally hit my stop loss, or it's going to have a larger move up. So it did have a larger move up, but then it retraced down and then it closed here. So I'm thinking, all right, it's probably going to hit my stop loss. And that was another major mistake, because when you start thinking like that, you start thinking about things that you shouldn't be doing, like emotionally interfering with your trade. So as time went on, it started getting closer to expiration. So it's 11:45. I'm on a 0 DTE. I have about hour and 15 minutes left. So in my head, I'm thinking, well, like, what if it doesn't move at all? Like, what if it looks like something like this? 12 o'clock comes. I'm finally into profits. Now, I was like, something is better than nothing, I'm going to close out. I made $180, almost 11% on my money. You say it's not bad. Well, had I not interfered, the same contract that I sold for 186 or $1.86 was then worth $6.44. Not only that, I started trimming some of my position because I didn't want to suffer another max loss again. That's part of the psychology. Something that I never do, never have done, something that I shouldn't do and will never do. So I ended up suffering $117 loss. So these two trades, all in all, it was probably like $63 I made instead of $5,200 had I just not done anything and just trusted my trading strategy, because this was at 12:35. There were still 30 minutes left onto the session, but I interfered. This was another contract that was worth $2.39 that ended up being worth $7.34 that I closed close to break even because I didn't want to lose any money. So it's definitely unfortunate that I got into my own way, but that's why I always tell people, like, trading psychology is definitely a big part of trading. Because this alone here, this would have been plus 5,200. I lost about 1,500 on this trade. I made 1,200 on this trade. This trade, had I just followed my system last Friday, or the Friday 5th, June 5th, this would have been worth a lot. So within 7 days, I would have been up close to 10,000, maybe 8,500. But those are one of the things that happens in trading. And Friday came and there was no trade to be taken. I didn't want to force anything, and so I just kind of stayed away from the 0 DTE. So this could have been a big week. I know that the Wednesday CPI data came out, which I was essentially betting that the market was going to sell off. It was a speculation trade that I was right on. However, I accidentally closed out my contract because I was trying to set a stop loss limit, but it was a regular limit order. So I got out of the trade completely, which sucked because, as you can see, June 10th, it went down some more that day. 7:25. I ended up getting out. It was really early in the morning. Here, my profits was around 2,000, so I ended up 600. This was the $1,500 loss that I suffered with that max loss. So it's a bit discouraging, but I tried to stay mentally strong. Here started off the trade that went heavily against me in the beginning. I'm thinking, oh, it's gonna be another trade that hits my max loss. Here's when I broke even. I got out of it. Instead of it being a $5,200 gain, it was only a $60 gain. So, I had some other positions as well. It started going down, but overall on the week we're at 6.23%. Coming up, I have some positions that I put on. We'll see kind of what these will turn out to be. These are all trending. This one, I've been in it for about a week. Doesn't look to be doing much, but as you can see, it's trending downwards, but it's a slow grind to the downside. I was in this trade. This ended up being a win, and I got out around here. Which typically I would probably still be in this trade, but I got into, here's one of the losses I had, AT&T. I got in about right here, and it just trended upwards. I did a debit spread on that one that I ended up losing. It's like $250. The UNH, it's trending upwards, but this was a weekly chart trade, so it's increasing on the weekly chart. So we'll see what happens. I know on the Amazon, I had got a signal. This Monday that I didn't take. And the last one was I got a sell signal on Snap on Thursday, so we'll see what happens with that. AMC, I got a buy signal on the weekly chart, so that's why the expiration date is so far out. And this is what I was mentioning about the expected move. On Tuesday, it got close towards the bottom, and then it just shot all the way back up. The day started, it went to the top of the expected move, and within that same day, it went from 725, almost 726, all the way down to 686. Now, had I been thinking, I probably would have done like a speculation play, put on a put here, and just kind of wrote that one down, and then a call here near the bottom once it got close. But always, things are always in hindsight. You can't always be perfect at predicting. Because I've seen things like this where, it's near the bottom early in the week, it shoots up. I probably would only do this on like a Monday or a Tuesday, because Wednesdays are like 50-50. Like Tuesday, it got close to the expected move on the week. Like here, November 11th, 2025, it got close towards the top. This was a Tuesday. It actually went past the expected move. I would have done a call. This one would have been a loss, 11.25. Call here, put here. So definitely a call here. So I think that's something that I'm going to implement in the future. But all in all, I think I've learned a very valuable lesson this week. When I have moves like this in one day, one morning, I have to be able to account for moves like that and be able to handle it accordingly. I've always typically, once it reaches my, and this is what I did in Forex. Once it reaches my take profit, like here, I would take half the trade off the table, set my stop loss to break even, and then I will have a separate indicator that follows this price that, I would just adjust kind of my stop loss with it. And then when the next bar comes, set my stop loss where the indicator is at, and then if price hits it, I'm out the trade. And then you just move on to the next trade. You don't think about it. You don't say what ifs, I could have. But a lot of the times, or I would say majority of the times, I've missed out on really large trades for gains. It's because I haven't had that same framework. Missed out on 2,400. This was actually should have been 32, about 3,000, but missed out on gains there. Missed out on profits here. Missed out on profits there. So I think it's always important to, just go back and test your strategy, But this week, this weekend, I'm going to write down a trading plan for my 0 DTE. So that way, this upcoming week, I can stick and adhere to it. I don't know if it's if it's 5 trading days, I'll go 5 for 5, 0 for 5. I'll only have 3 opportunities this upcoming week to, do a 0 DTE trade. I may lose all 3. I may win all 3. I may be up 10,000, 15,000. Who knows? You really have to just temper your expectations, not think about profits gain, profits lost. You really have to operate like a robot and be emotionless about this whole thing. because that's when you operate at your best. And it's easier said than done. It's a reason why there's not a lot of profitable traders out there, especially in the long term, just because they don't have the psychology for it. Because it's counterintuitive to human nature a lot of the times, especially when it comes to losing money. You start to do things like revenge trading, which is never good. That's how you end up blowing your account. Because I know there was a time, whichever day that was, where it immediately hit my stop loss. Here, June 10th, 10:45, when it immediately hit my stop loss, and I went down to the lower time frames, I was seeing it go the direction that I said that it was going to go. So here, essentially, at 11:45, I could have got back into this trade, and that would have reinforced bad habits or bad trading psychology, which ultimately, had I taken that trade and made, let's say, 3,000 on it after just losing 1,500, that would have reinforced bad habits, bad psychology. It would have done me more harm than good than just making an overall profit of 1,500. So, I just decided I'm just going to take the L. It is what it is. It was very upsetting. And I think that's one of the things where it's like, it's one thing to tell somebody to not be attached to this, but, there's other times where it's okay to, have some frustration for a certain period of time, and then you just gotta be like, all right, next day, you forget about it. You act as if it never happened. It's the same as if a quarterback threw an interception the last game. The next game comes, you can't think about previous interceptions you've thrown, because then you become hesitant. It all goes downhill from there. But this is what I was mentioning, where 10:44, I literally got in like right here at almost 696, and then it shot up within 1 minute, and then the next minute it went from 696 all the way to almost 699.50. So that ended up taking me out. And it's crazy to see movement like this within 2 minutes. It's almost 0.5% within 2 minutes. Within the 5 minutes, it was over 0.5%. You rarely see bars like this, like 0.33, might not even here. That was a really big move. Like here, this bar here, 801. It's crazy. So that's why I have a looser stop loss, to kind of weather moves like that, to keep me into the trade, so that way I don't get stopped out too early, and I can still benefit from the trade going my way, like this one here. But before I go, I forgot to mention I finally got an email from my prop firm that I was able to send in my results of my demo trading, and they approved for me to trade live capital. So I'm going to go through the onboarding process and all of that, and I'll be documenting my trades for that as well once I get started, so you can kind of see what it's like from a professional, let's say, setting on risk management, not committing to bad habits like over trading, revenge trading, how to look at the market or the indexes, then look at the sectors, and then look at the stocks. Instead of looking at individual stocks, you want to have kind of a pyramid of the way that you go about things. It's market, sectors, and then whichever sectors are doing good, like technology sector, things tend to follow. Well, it starts to essentially feed into the certain stocks within that sector. So I'll be documenting my journey on that as well, and some of the psychology that I'm going through with that, so you can also apply it to your trading, or it may be something that you never thought about that you can implement. So looking forward to that, and be ready for the next video.